All right. Good morning, everyone. It is 8:18 in the morning of January 11th, 2023, and this is my pre-market strategy session. And so, the title of today's video is Dr. Copper's bull move secular, inflationary, or broad-based. And so, the reason it's called Dr. Copper is because typically speaking, movements in copper have diagnosed or have been a indicator, of economic activity, which has been an indicator of market activity. So in the world of front run the Fed, commodities don't exactly follow that. Risk assets like stocks and bonds and so forth are really all about front running the Fed, really. And so what we have here, this is the monthly chart on copper. And you can see here in the past 4 months, copper, let's say let's say 7 months. From the bottom there to the top, copper's made a 29.4% move, 29.18% move, sorry. And so is that something that is happening in the commodities area? I mean, is this due to, higher input costs from energy? Is it an actual indicator that global GDP is, productivity is kicking up? Well, it's hard to say. Let's look at wheat real quick. See what wheat is doing. Ooh, very interesting. Wheat's coming down a bit. Let's see what corn's doing. Corn. Corn is somewhat elevated here. Looks like it might be trying to roll over. It's a pretty steep curve. What else is out there that's good for? Let's see if we have something for beef. Beef stocks. Beef. Let's see beef stocks. Let's see if we have something like softs. Soft mat, soft tech, and commodities. Stock futures. Let's go with futures. No. What else is out there? Wheat, corn, softs. Let's go with. Let's see if we have bacon. No, bacon isn't found. What is it? The bellies, the pork bellies, pork bellies, pork cutout futures. Oh, well, hey, look at that. That's good. I can afford my bacon. Make it easier for me to afford my bacon. All right. Well, so very interesting. We're getting this move in copper here. And you would think, with a move up like that in copper, and it's gapping up this morning. It's gapping up 2.67% this morning from its previous close. So, it just, generally speaking, I'm bullish right now. January and February are bullish times of the year. It's just when there's a whole lot of repositioning going on within certain, portfolio managers and hedge fund managers and so forth. When they're doing repositioning, it just sort of creates a little bit of a larger than simmer kind of move in the market. Let's look at the VIX. So the latest low here on the VIX, it was put in back in August, is at 1912, and the VIX is approaching that. A breakdown below 20 would probably get bulls pretty excited, like it did back here in December and so forth, but didn't really pan out for the bulls so much at that point in time. A sustained move below 19 and into the mid-teens would be pretty bullish, at least for the short term. So Uh, it's my bias is bullish, and so I'm kind of looking for anything that will support that bias. And so I'm not seeing it exactly. The move in copper, that's encouraging. The dollar, drifting downward, that is encouraging. When the dollar moves down, the markets tend to move up. There tends to be a negative correlation with the move in the dollar on the markets. You can see here this march up from January of 2022. See, we bottomed. So November of 21 was the peak of the Qs, right? So November, that happened right here. You can see this march up right here. Oops. From November, we'll call it roughly the end of November or something like that. This march up in the dollar corresponds with this march down in the Qs. Same time frame, right? So the dollar coming down is good, for equities. Price stability. If the Fed, is actually doing the right thing here, which would be amazing, then we ought to see things calm down a bit. Now, again, I think it's totally short term. The long term here, I'm going to go to the monthly chart on the 10-2 spread. This, when the yield curve inverts like this, and it can stay inverted for anywhere between 12 months, historically speaking, it was inverted for between 12 months and 18 months before it normalized again, and that's where we saw these crashes in the S&P and in the Qs, is during these green sort of oval. These are sort of like exclamation marks, and so the period part of the exclamation mark is the inversion, and then the sort of broad stroke of the exclamation mark here is where the markets crashed. There was some kind of event, whether it was liquidity or who knows. I mean, just all sorts of stuff that I'm most familiar with the 2008 because I was studying for my MBA while that crash happened. And so the dot-com bubble, there was just a ton of money. And if there was something like, pets.com and there were just anything .com that came out, it IPO'd in this time frame back here, just launched, and there's tons of money put into it. And once it turned out that these things, weren't making any money, in fact, a lot of them had to close their doors. The values of those .coms tanked horribly. Pardon me. I need a little bit of a drink there to wet my whistle. All right, so and even for example, if you look at Amazon, back then, Amazon, I think it went up to like 100 and, well, let's just look at it. Went up to like 100 and something, like 160, 170, MZN, ZN, yeah, there it is right there. Let's take a look at it back here in 2001. Oh, interesting. Oh, I thought it went a lot higher than that. Well, so yeah, Amazon, was one to survive, right? Amazon.com was one to survive. Jeff Bezos really stuck it out through here. And so it went up to $5. This has to be after splits. This has to be after some of the splits took place. Maybe it's never split. Well, anyway, this was a common story in Amazon. Let's look at Yahoo. I think Yahoo is probably a pretty good example. Oh, there's no Yahoo stock symbol anymore? Where did Yahoo go? It used to be YHOO, right? Yeah. What is Yahoo's stock symbol? Does it even have a stock symbol anymore? What is Yahoo's stock symbol? MM. Huh, interesting. Let's take a look at MM. I guess they were. Let's see. Let's find the U.S. 3M company. Wait a second. Is Yahoo publicly traded? Nineties became a public company via initial public offering. Blah blah blah. Weird. Yeah, here it is right here. Let's see. Chart. November 22. Let's see. Huh. Well, okay. So Yahoo isn't on. That's how long it's been since I've looked at Yahoo stock. All right. Well, anyway, yeah, .com bubble. Pop up came down. Here's the. Here is the 10-2. Right. Anyway, so okay, great example. Sorry about that. I should have pre-planned that a little bit better. Well, so anyway, when this yield curve normalizes again, we'll see a crash of some kind. Something's happening. And in the meantime, though, things can be bullish while this yield curve is inverted. And so, in my opinion, that's where we are now. Where the Qs look like they're trying to bang out a bottom, and then after I don't know 6 months or something like that, once this yield curve starts to normalize, there will be something. There's going to be something that's going to cause people to sell. Liquidity. I mean, who knows what, So back here, it was just a downturn in the recession, and people couldn't afford. People started getting laid off, and they couldn't afford the mortgages. And there were people who had, 5 and 6 mortgages because you basically, the subprime market, you could loan to anybody. There was no need for income verification or any kind of stuff going on that a lot of lenders require for successful lending. And so the economy took a downturn. The demand for housing went down because people lost their jobs, and then a whole bunch of mortgages went bad. AAA rated bonds went bad, and back here it was just another economic downturn. The economy started to slow down, and people couldn't afford to buy these high flying tech stocks that weren't making any money anymore, and so they got sold. What's it going to be this time? I don't know. I mean, the Fed tightens. There will be less money sloshing around. It just and there's been a ton of stimulus in the past 10 years. I don't know. Maybe there won't be a crash, but maybe a sustained slowdown or something. Maybe this yield curve starts to do something like this for a long time until it comes up, and then by the time it comes up, the economy's ready to flourish again. But who knows? I mean, really, just go off of history here. You've got an inverted yield curve. Eventually, it's going to normalize. Eventually, that's going to be a damper on equities. But for the time being, things can be bullish. There's nothing wrong with it, especially this time of year with all the jockeying going on. So, copper, we get to see whether copper is in a secular move, whether it's just a copper. There's going to be so much electric vehicle and renewable energy that relies on copper, and so on and so on. It's just going to be a copper story, or is this just a part of inflation that's still in the system? I mean, we get CPI tomorrow, and if CPI is still high, that's going to be bad for the markets. Let's see, what is the CPI forecast for tomorrow? Let's find out here. CPI forecast. Let's see. Let's go. We're in January. For December. Let's see. Expected to have risen 6.1%. All right. So let's see. Is that for December? The annual inflation rate in the U.S. slowed for a fifth straight month to 7.1% in November. December last year. October, where are we? October 22, November reference. Okay, so the consensus is 6.5%. And TE forecast, this is Trading Economics forecast, at 6.7%. So TE is forecasting it to come in hotter than expected. Interesting. Okay, so 6.5%. We'll see tomorrow what happens. If it comes in at consensus, then I guess that'll be kind of okay. Coming in less will be very favorable. So perhaps copper is moving up because of inflation, but then so would every other commodity if it's an inflation thing. Or is it a broad-based rise in prices? And if that's the case, if copper's, Dr. Copper is what they call it, if copper is rising because there's a broad-based move in the price of everything from, equities and bonds and commodities, then we can expect to see a really nice rally. So yeah, kind of dependent. Tomorrow is going to be a big day. The CPI report coming out is going to be a big deal. It comes out at 1:30 Mountain Time, so it means 12:30. Let's see, Mountain Central. So that means 11:30 Eastern Time. So yeah, we get CPI. Let's see what time. I used to know all this stuff by heart. Oops. Let's go to Google. What time is tomorrow's CPI report? Oh, it's at 8:30 in the morning. Okay. I thought that was this seems strange. I always thought the CPI reports came out before pre-market. All right, so 8:30 in the morning. Okay. So things will probably be pretty quiet today, I imagine. I'm still expecting a bullish day today. I'm still expecting, let's see, we have a small rise. Yeah, we're up 0.17% in the pre-market. And actually, we're close to overbought in the pre-market. On the 10 minute at least. On the 1 minute, it's getting down into oversold. On the 1 minute on the VIX, it's going to overbought. And it's closer to oversold than overbought on the 10 minute. Usually when all the signals are discombobulated like that, they're all kind of moving to the center and so forth. It's usually bullish. It's when in doubt, go long. That's the advantage on the market is to the bulls, historically speaking. And here we are. We've bounced off of this 38.2 3 times now, and come back up. So this 38.2 fib is holding up splendidly. Let me go to the monthly. At 260.41. And so even if we are in the midst of a distribution pattern in the Qs, which I kind of think that we are right now, there's still a decent probability of things moving up in the short term before we finally see that yield curve normalization happen and we have the real big downturn. All right, everybody, good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. Thanks for tuning in. I am out.